Matt Mali, Managing Director at Miller Tabak. Good morning, Matt, and thank you so much for joining us.
Thanks for having me.
So, Matt, before we move to earnings season, I was wondering, what are the market's internals suggesting to us?
Well, I mean, gosh, the market's up almost every day. I mean, it's up 8 out of the last 9 trading days on the S&P 500, so it keeps moving higher. But I will say that the breadth, in other words, the advances versus decliners, have not been keeping up with the market. In fact, yesterday it was basically flat. For a market that was up for an S&P that was up 0.5%, that's not very good. And the Nasdaq, it's interesting. Even the NDX, which is the Nasdaq 100, really heavily weighted in the tech stocks. The breadth there was only 1.6 to 1. It wasn't even 2 to 1 positive, and yet their index, those indexes, the Nasdaq Composite and the NDX were both up almost 1%. Usually, you like to see 4 to 5 or even higher. A breadth of 4 to 5 to 1. It's Tesla and a few other stocks are really the ones that are pushing this rally a lot harder. It's not a very broad one, but having said that, it keeps going higher. So it's hard to fight the tape.
I just wanted to touch on very quickly on Tesla. What we are seeing is certainly incredible. Do you think that this is, how can I say, probably the normal development of the company after this major order by Hertz, 100,000 cars? And this is huge, that's for sure. But isn't it a little exaggerated, the pace with which Tesla surged to 1 trillion stock club?
Yes, definitely. I mean, the one thing is, it's funny because when I was saying that, the stock could break above 800, it would see a nice quick move to 900. And then then I was saying the same thing. 900 was kind of a key resistance level. And if it could finally break that, it should shoot higher. I didn't think it would get to 1,000 that quickly, and it's getting ahead of itself. There's no question. I mean, one of the reasons why it happened so fast. It was interesting going through last week. Even though the stock was marching nicely higher, there was still a lot of people buying puts. The put volume was quite high. So the broker dealers, the ones who sell those puts, they have to cover and they have to hedge their positions. So they go out and buy the stock. Some of them don't fully hedge it, and that's what we saw yesterday. Not only was it a bit of a short squeeze for the people who were short the common stock, but also those who were short those puts. They had to cover, and so it was a massive short squeeze. And I'd also note the RSI, the Relative Strength Index, which is a key indicator for whether a stock's overbought or oversold. It is incredibly overbought. It got to 91 yesterday. It could go a little bit higher, and so the stock maybe get one more day out of this. But I do think long term, intermediate term, the stock looks great. The fundamental, this new news is very positive. But the stock's had 24 corrections of more than 20%, some as much as 60% in the last 10 years. I just think that we're getting ripe for a material pullback near term. Doesn't mean I think that, in other words, I wouldn't be chasing it up here. I think you'll get a better opportunity to buy it a little bit cheaper in the coming weeks. And I think that drop should come very soon. Again, when any stock gets above 90 with its RSI, it doesn't stay elevated for more than a couple of days.
So do you think on a fundamental basis, how can I say the fundamental basis reflect the current price of the stock?
No, I do not. I think it's gotten too far ahead of itself. I think it needs to pull back. I mean, obviously, a lot of this it's ahead of its fundamentals either way. But all growth stocks are to a certain degree, so that's okay. But when it gets this far ahead, it just seems to me it was just because of forced buying. It's the same thing happens on the other side when a market really gets clobbered or a stock gets clobbered and there's margin calls and a stock gets the baby gets thrown out with the bathwater. It's an unbelievable opportunity to buy the stock. In this case, I think we've had forced buying. That's taken it too high. I think it's got to settle back down. I think it'll be, could see a 15 to 20% drop. It may not start today, it may not start tomorrow, but I think in the next couple of weeks, we'll see a decent pullback in the name. That will present another great buying opportunity, however.
Certainly, Matt. Another stock to watch is no doubt Facebook. I just wanted to show very quickly the price action in pre-market trading, which is up about 0.5%. A lot of volatility in pre-market trading, that's for sure, in regards to the stock. Yesterday, we saw the numbers mostly better than expected. Outlook not that positive. And of course, Facebook also said that it was changing its reporting structure to break out a unit called Facebook Reality Labs that encompasses augmented reality and virtual reality products and services services. So this is a little bit of a small change in regards to the company. Then we saw, of course, all of us, the Wall Street Journal Facebook files, which were extremely interesting. What's your take on the company? Because it looks like that it resists that kind of pressures.
Yeah, I mean, it's interesting because the stock, you look at the way it traded overnight, it's up about 4%.
Yeah.
Now it's come back down. It's only up slightly. We got to watch that 200-day moving average on a technical basis. It bounced off that in the first quarter several times. It bounced off again this quarter, but it's right. It retested that level yesterday and then bounced again. So keep an eye on that. That's down at the I think it's the 319 level. You get below that in any kind of meaningful way, that's going to be a big problem for Facebook because of these issues. I mean, they just announced the buyback. That's good, but the rest of the earnings report wasn't that great, and they still have this cloud overhanging them with further regulation. I mean, it's just. You just need to be careful here. I mean, a lot of times when a stock's come down this much and it's testing a 200-day moving average, we think, oh gosh, it's going to bounce this time. It's going to hold. Should be a nice stock. But this one, when you get the political aspect and you throw that in there, it's just something that people need to be aware of, need to be careful of. Again, if we break that 200-day moving average, especially because geez, the initial news out of the buyback and stuff was up 4%. Now it's back to unchanged. The stock hasn't even opened yet. So let's see how this trades today. It's going to be very, very important over how it finishes the rest of the year, whether it can hold this 200-day moving average or not.
I just wanted to highlight what Mark Zuckerberg said throughout the call. My view is that what we are seeing is a coordinated effort to selectively use leaked documents to paint a false picture of our company. Of course, he was referring to the whistleblower, which was certainly extremely dangerous and had a major impact on the stock. As we can see, 1 month off about 7%, 1 week off about 2%. Do you think that in the long run, Facebook will be able to perform as we were used to?
It's just going to be difficult. We have, the thing is, this whole, people. The one thing, on the one hand, you have portfolio managers, especially the institutional players, are saying you can't. They're such an important company. I've got to own the stock. But you have this issue with teenage girls and having their problems. At some point, this has got to. There's got to be some serious blowback. And I think I guess my point is, this is one, if you hold it and you want to own it for a long period of time, that's great. This is a great company. They're not going to go out of business. This is not the equivalent of the tobacco companies. And let's face it, the tobacco companies didn't go out of business. They're still around. So this is a good company. The problem is they're facing some serious headwinds over the next year. So I just think if you hold on to it, be careful about adding to it right here, and wait till they kind of. To be honest with you, once they get through these issues, I think it's going to be a company that's going to do very, very well. But because they do so many things that are so positive for society, but they're still going to be very profitable. If they can't get that, the absolute maximum profit, that's going to be okay. But I do think they're going to have to give up some of that as these regulations pile in over the next year or so.
In Matt, of course, final take on the Nasdaq Composite. We might see a little bit of surge today, or not maybe. After the closing bell, we're going to see the numbers of Microsoft, Alphabet, and Twitter. What are your targets in regards to the Nasdaq until the end of the year? And do you think that we could see a major boost this week?
Well, this is going to be a very, very important week for the Nasdaq, and especially the QQQ, which is the Nasdaq 100. Because these earnings, the thing is that a lot of the interest rates have been moving higher. That's been a headwind for this group in the past, and they've kind of stabilized here at 1.6%, but that's still quite high. And so my concern is that that'll create further headwinds as we move into the last 2 months of the year. However, we also know that portfolio managers, especially on the institutional side of things, they like to, if the market's rallying into the end of the year, they're going to go to the stocks that are working. And so we're kind of, the situation where this week, if the stocks can continue to rally in the face of, because they need these earnings to continue to rally in the face of these higher interest rates. If they don't get those, if we've had a few good ones so far, but if they start to report some poor ones, we had Apple later this week as well, then that'll create some problems. So I guess my point is, right now I'm worried about higher interest rates. I think it's going to be tough for the group to rally. But if they continue to report these good, real strong earnings, the momentum thing will take it into the end of the year. Then we've got to take another reset and really look at them, because again, I think interest rates are headed higher because inflation is headed higher. That's going to make it tough for these tech stocks to outperform in 2022.
That's pretty interesting, and as you mentioned, it's also very interesting what we are seeing on the bond market side. 1.62 the 10-year treasury, the 30-year 2.06%, and of course inflationary pressures to the upside that look like more structural rather than temporary at this point. Do you think that we're going to see higher treasury yields in the remaining part of the year?
Yeah, I do think we will. It's just inflation. It's just too prevalent, and we're seeing more. I mean, of course, companies are talking about it more today. We've had a lot of really successful money managers have come out and said that they're very concerned about inflation, and we can add a couple of that today. Larry Fink, who's the CEO of BlackRock, and Steve Schwartzman, who's the CEO of Blackstone, the big private equity firm. So you got the biggest money manager in the world, one of the most important private equity firms in the world, and they're both jumping on the list saying that inflation's a big problem. And the one thing, I guess, is this whole thing with higher oil prices. Oil getting a little overbought. A lot of people had been thinking, it's got to come down a little bit, and I've been one of those things too. One of those people too. Obviously, I've been very bullish on the energy stocks and energy as well. But then we had this thing with La Nina coming out, over the weekend. People talking about how it's going to be a much colder winter, and now oil price people are now saying we could get $100 by the end of the year. These are the things that. I think are going to be very, very important for interest rates. If these commodities continue to move up, that means higher inflation. That means interest rates have to rise.
Thank you very much once again, Massimo Mali, Managing Director at Mirror. Thank you for joining us. Have a great day ahead, and talk to you soon, hopefully.
Thank you, Alex. You too. Have a great one.